welcome. You're watching The Money Show. I'm Kavita Thapliyal with you, and on this show, we decode everything about personal finance. And just in case you want to get your life financial planning done on the show, we do that as well. So all you have to do is just send across your questions on our WhatsApp number and email ID that's flashing on your screen, and we will help you align with your financial goals with the right kind of strategy suggested by our expert. But today, let's begin the show with something very important. Important is having the right amount of health insurance, and looking at the medical inflation or health inflation going up, should you also be considering the right kind of health emergency corpus? That's the conversation we are going to have. It's not about either or, it's about having both of them together and getting the right kind of strategies for that. I am joined by Vaibhav Karju and Shilpa Gole. Hi, good evening. Welcome to the Money Show. And Vaibhav, let's break down or let's simplify the process and the thought and the calculation behind getting the right kind of health insurance cover.
Right. So, Kavita, there are multiple features, but most important, there are 3-4 features which we should keep in mind, or points we should keep in mind. Who all are in part of a family? Is it only a single person? Is it married? Does he have children? Does she have a husband and children? So it depends on whosoever is looking at it. Also, very importantly, today there are plans which allow people to buy for their parents as well. So if there are elderlies at home, or they should also get covered. Keeping that aside, something also which is very important to keep in mind is where do you plan to get treated? And ideally, you should look at those plans which are cashless in those hospitals. So I know Shilpa on the panel is from Ahmedabad, and if I'm looking at Zydus as a hospital or a particular hospital in Ahmedabad, which is my preferred hospital, which all cashless treatments are there. Especially if you're from Ahmedabad or certain cities where certain insurance companies don't have cashless, because there are cities where hospitals have debarred certain insurance companies, then we should preferably stay away from them to keep in mind that we get the best possible cashless opportunity in the city. Also, one misnomer is there that if I take a higher cover, I will have to shell out a lot of premium, which is not the truth. Till 10 lakhs, maybe it goes up. But after 10, if you move from 10 to 25 or 50 lakhs, the premium doesn't shoot a lot. There's a marginal increment because most of the claims that happen are up to 5 to 10 lakhs. And lastly, what is to be kept in mind is you're not buying health insurance for 2025 and 2025. You're buying a lifelong cover. Health insurance can be renewed till the person is alive. So keep in mind your expenses that may happen in 2040 or 2050. So retail inflation, which we hear of 6%, 7%, is very different from medical inflation. Medical inflation is hovering between 14, 15, 16% usually. So cost of treatment would go drastically up. So if you think 25, 50 lakh kind of a cover is too high for you today, it's okay. It will be a nominal amount by the time you actually require it. So those are the key things that you should keep in mind when you're choosing the plan.
All right. We will take this one by one. But then before that, Shilpa, we all at least understand the importance of having an emergency fund. But when you talk about a specific emergency fund, like for example, a health emergency fund that I'm talking about, what are the steps that one need to really, factor in? The process although remains the same, but then how do you derive at that particular amount? Because generally for an emergency fund, we say that, any unplanned expenses or something like a financial crisis that comes up, you can just keep like a 9 to 10 months of your salary saved as emergency fund. But when we talk about health emergency fund, does the scenario changes? Does the strategy changes?
It's a great question, Kavita, and thank you for having me on your show. So, I think when it comes to health emergencies, like Weber was pointing out, the inflation is insane. We're looking at inflation rates of 12% and 13%, 14% even. So, when you're talking about health, I think it's very important to see the adequacy of your coverage in terms of your health insurance first. Now, there are two ways to look at this. One is when you're talking about folks in their, let's say, 20s, 30s, and 40s, and then we talk about folks who are in their 50s and 60s. So I would say when people are in their 20s, 30s, 40s, they can look at their regular 6 to 12 month emergency fund as something that could also work for a health emergency. Now, why I say this is these are younger folks, number one. Second is unless they have, let's say, some medical history or some chronic conditions that they're dealing with. Otherwise, I feel like whatever's there in that 6 to 12 month emergency fund, that should be sufficient. Now, what is it that you need to take care of along the way? One is understand what are the hospitalization expenses like in your city. So it's very important to see what a very expensive hospitalization expense, like let's say a cardiovascular, a bypass surgery or a cancer treatment, what would that cost in your city? So that will just help you figure out what that ballpark number is that you want to set aside and think about. The second is that your emergency fund should definitely make sure to take care of out of pocket expenses when it comes to a health emergency. So, yes, even if you have a health insurance cover, there are going to be some out of pocket expenses. There'll be certain items that are not covered in the health insurance plan. There could be a copay clause, there could be deductibles in the picture. So, keeping all of that in mind, just see that over and above your health insurance cover, what is that extra amount that you need to think about, depending on which city and what the hospitalization expenses look like in your location, I would say. When we talk about people in their 50s and 60s, Kavita, I think they need to plan very differently. There, we're talking about more of a retirement situation where health insurance premiums can be extremely high for a very moderate coverage. So, I would say that for people in their 50s and 60s, do look at having something separate for a health emergency. So, we're not talking about your regular emergency fund for other unforeseen expenses, but for health emergencies, have a standalone health emergency fund which has to be over and above whatever health insurance coverage you have, Kavita.
All right, so this really gives us a sense of the direction that one might need to work on. But then, Vaibhav, having said that, look at the policies these days. We have a comprehensive health insurance plan, Vaibhav. We also have something called as critical illness. We also have something called as accidental insurance. So, I mean, it's not the right term to use, an insurance portfolio. But then, having said that, how much of it is enough? Okay, we discussed about the right kind of cover that one might want to calculate or factor in, but how much of it is also enough, because you have coverage of so many types, like rightly even Shilpa highlighted that you can take an add-on or there could be riders. So how can one strategize all of this with the right amount of proportion and then go with the strategy that Shilpa suggested?
So, what Shilpa suggested is absolutely correct with respect to age, demographics, and things like that.
Right.
Your question can be split into two portions, I would say. One is if somebody has a comprehensive health cover or doesn't have a comprehensive health cover. And to each individual, their demands would be very different. But to look at a holistic picture, if somebody has a comprehensive health cover and which is a very good detailed health cover, he can look at skipping the accidental cover. But what's very, very, very important is to look at the high expense product claims which may happen, which are cardiovascular and cancer, these two specifically in your vicinity. So if you're staying in one of the metros, you may end up spending over 15 to 20 lakhs as of date. In future, naturally, the amount may go higher. And in a smaller town, also, you will spend around 10, 12 lakh rupees in these two kind of ailments. So what you should do is you should have a comprehensive health cover. And then there is something which we very strongly recommend is a crisis cover where cardiovascular and cancer can be taken standalone as benefit products, and they can look at replacing your loss of income also in case of any of these two ailments happening. So what is important is normal ailments or normal surgeries usually happen between 5 to 8 or 10 lakhs. But when it comes to cardiovascular issues and cancer, the sudden jump goes to 15-20 in 2025. This will go up. So two broad covers which everyone should always have are a comprehensive health cover for the family, and these two specific cardiovascular and cancer covers, big ticket standalone products to be kept aside. If somebody cannot afford for whatever reason comprehensive health cover, in that case they can look at an accidental standalone policies or things like that, because then they are getting covered only for the expenses that are happening through accident. But and these are very, very, very affordable products, and hence I would say people who cannot for some reason take it. In some cases, also what happens is there have got people who've got pre-existing ailments, and their comprehensive cover is not coming, or rather the policy is not being issued to them. In that case, also they can look at an accidental cover so that at least their accidental-led expenses can be covered. But if you are healthy today, take a comprehensive cover and a cardiac slash cancer cover immediately.
All right, Shilpa, let's talk about the investment instrument that can be used to build this particular corpus now.
Sure, Kavita. So, when you're talking about a health emergency fund or an emergency fund in general, here you're not The aim is not to earn a high return, because remember that when you're talking about market linked returns, there's a lot of volatility involved. So here you want to put your money in something that's stable, something that's highly liquid and easy to access in case of an emergency. So here we would typically recommend products like a liquid fund, your plain and simple fixed deposit. You can look at an arbitrage fund. You can look at low duration funds. Any short term debt fund that is basically keeping your money relatively safer than it would be in an equity instrument, Kavita.
All right. But then, Shilpa, also at the same time, should we be having like a health emergency fund investment? Can we align it with our equities, or you think that we should be keeping it safely in a debt option only?
So, great question, Kavita. And I think a lot of people have this reluctance because, you're talking about health expenses growing by 12 to 14%, whereas this liquid fund or arbitrage fund is giving you barely 6% return. But here, again, I would reiterate that the objective is the safety of your money and you want to preserve the principal. So, imagine a situation where the markets are volatile, there's a bear market, even your principal is down at that time. You don't want such a situation in a health crisis. So you definitely want to keep that money in something stable. Now, therefore, what happens? How do you then make up for that 8% loss of purchasing power? So there it's important that you keep topping up your emergency fund year on year, and that top up has to come from your savings, Kavita.
All right, I think we've covered almost all the aspects of this very critical planning in your life, because it's just not investments that one really needs to plan for. It's also the insurance part, and how can you also align your insurance and investments by via right strategy really matters. Thank you so much, both of you, for joining in and helping our viewers navigate this today. Thank you.
Thank you, Kavita.
Thank you. Thank you, Kavita.
So on that note, it's time for a quick break, but then post that, let's get your portfolio specific queries answered. And before I slip into a break, let's also flash our WhatsApp number and email ID where you can note down our WhatsApp number. Send us your question, be it investment or insurance. Our experts will have it answered. And also investment related queries, whatever you have so far you've invested, just give us all the details so that we give you the right way and align your investments with your financial goals. See you after this break.